Hey everybody, welcome to Trading Capital's Analysis and Insights. Today is currently September 2nd and we're going to be jumping into a couple of the crypto coins, so Bitcoin and Ethereum, discussing what's going on there. And then we're also going to dive deep into some of the new trade alerts that we issued and a couple key correlations that I have observed. So starting with Bitcoin's price action, Bitcoin on a relative strength basis is actually holding up surprisingly better. Now, don't get me wrong, this type of price action is extremely bearish, and I am not hopeful or optimistic that Bitcoin is going to rally anytime soon. And if you look at Bitcoin, it's formed this beautiful bear flag which triggered, and now it's forming another micro bear flag which looks to be on the verge of triggering. You actually have a 1, 2, 3, 4, 5, 6, 7 days of consolidation. Basically within the next 3 days or 4 days, Bitcoin should make a move either up or down, and the probabilities point to a move down just because on the minor time frame, so the short-term time frame, you have a bear flag. On the medium-term time frame, which is this over here, you have a bear flag, and then on the even longer-term time frame, which would be the weekly, you have yet again another bear flag. So tons of bearish signals or bearish patterns forming on all the time frames leaves the most probable outcome that Bitcoin heads lower. Now, excuse me while I clear my throat. Now, one of the key things that I have been observing with the price action in Bitcoin is many people have talked about the correlation to the Nasdaq in the sense that Bitcoin moves 3 times more in terms of the direction of the Nasdaq. So if the Nasdaq pops by 1%, Bitcoin goes up by 3. If the Nasdaq drops by 1%, Bitcoin goes down by 3%. So we have seen that correlation work at times, but typically correlations do break. And what I have noticed is that the correlation is slightly broken. So if you look at the last 1, 2, 3, 4, 5, 6, 7, the last 7 trading sessions, Bitcoin has been in this tight range here, basically trading at 20,600 at the high and 19,400, 19,500 at the low. So very tight range. Now, if you look at the Nasdaq, the last 7 trading sessions, look what has transpired on the Nasdaq. 1, 2, 3, 4, 5, 6, 7. Basically a 9% move down from the high here to the low. So when you factor in the last 7 days how much pressure has been on the S&P and the Nasdaq, but yet Bitcoin has barely budged from this tight range, just shows you that that is pretty impressive in the short term, and it is showing relative strength. Now, one could argue that Bitcoin's move came ahead of the Nasdaq by this massive downside here, consolidation, and downside. So we could actually see a break in Bitcoin's price action fairly soon. Notice with this bear flag we had 1, 2, 3, 4, 5, 6, 7 days and it broke. Notice what day we're on. 1, 2, 3, 4, 5, 6, 7. Will it break today? Time will tell. But again, it has shown relative strength in the last 7 days when you compare how much Bitcoin has fallen relative to the Nasdaq. So just very interesting tidbits of information that might be displaying that we could see a short-term bounce in the risk assets. So that could coincide with our thesis that the US dollar is pulling back slightly. Now, we were buying positions today. We were accumulating a couple longs. We also did accumulated a short. To start with the short trade that we accumulated for the first time, we started a starter position in FSLR, First Solar. One of the reasons I'm starting to start a short here is I'm seeing money rotate out of these renewable energy sectors. And whenever you have a reversal signal followed up by a beautiful retrace and a failed breakout, that is never a healthy thing on a technical basis. So in my opinion, we have reached that resistance zone where the buyers are exhausted and it's going to be the sellers that now step in and cleanse or shake out the weak hands before this can resume in an upward trend. But if you look on a weekly chart, the interesting thing about this chart is that if we take this trend line and connect it to this pivot here in 2018, to this pivot here in 2021, to this pivot, 2 pivots over here, look what you just tagged this week. You tagged massive resistance on a beautiful extended move. And I think a lot of people have been chasing the renewable energy sector higher due to the fiscal bills that have been passed. But those bills can be changed, especially if the Democrats lose the midterm elections and we start to see, money rotate back into potentially fracking industry over the renewable energies. But nonetheless, I think a lot of people have chased this momentum to the extreme as per the technicals hitting resistance, and I do think you're going to have a little bit of a mean reversion. Probably you'll find support. Let me just flip to a larger time frame. So you're probably going to find some support here at 118, which would coincide with these pivots. But ultimately, I do think you have to come down to fill this gap here at 102. That'll probably correlate when the indices start their sharper move lower. But again, that could be relatively soon, being the fact that QT starts. So even if we get a move down to this first level, that's about an 8% gain. Second level, that's about a 20% gain. So I do think these key gaps will be filled, and it'll be interesting to see how fast this does fall once the markets resume their downtrend. But you're into resistance, you have a reversal signal, you have a technical trend line going back pretty far, a few years now, 4 years, and this level has to be respected, especially since it's on an extended overbought move. So that's one of the new shorts that we picked up. Along with shorting, we're actually accumulating some longs. So we traded NEO a couple weeks ago where we bought it down here at this 1904, sold it at this 2181, and now it's retraced back down to our level, had a pop, retraced all the way back down here. We're slightly out of the money, but nonetheless, we're starting a small accumulation position, and I love this price action. This type of price action, this bullish down-sloping trend line, is actually notorious and very probable for breaking out to the upside. And one of the reasons I like NIO is this type of consolidation. Even if you flip on the monthly chart, this is what you call, excuse me, inside bar bullish consolidation. So we have our beautiful monthly reversal signal over here. If we flip on the volume, you can see you've had an increased volume. And then you've had some consolidation candles here. And you're now finding some near-term support. But as long as you trade inside of this bar, that is still technically bullish consolidation. And it does favor a move to break to the upside. So I love this bullish consolidation. This is extremely healthy consolidation. A nice tight range, a parallel range, might I add. So again, I do think NIO will break out sooner rather than later. Li Auto, we started accumulating a small long position on Li Auto, another Chinese play. I like these Chinese plays considering the PBOC is starting to stimulate. They're lowering interest rates, and then eventually they'll lower interest rates even more, and then they'll start printing money. So it's kind of like little mini cycles what the central banks go through. You've seen it in the Fed, you've seen it in the PBOC throughout history, where they don't aggressively start easing policy right away. It's little increments, stages, which will start to propel these stocks. But again, this type of bullish consolidation, we've had a healthy retrace, and considering we were shorting this stock, we covered it actually. Our average was here at 36.99. We covered it down here at 28.74. So now the fact that we're going long is just really, really incredible. I'm not bound by any type of investments. It's just I will buy a level if the charts are telling me to. I will sell a level if the charts are telling me to. So now it's time to go long in Li Auto, accumulate a position. We just did a starter position. One of the reasons I did this is you have this down-sloping parallel channel. You can see you've tagged support numerous times, finding the low range, and you've usually hit technical support. So you have this down-sloping parallel channel, which you've connected a pivot to a pivot to a pivot to a pivot, and you've actually pierced it today and closed above, recaptured that channel. So that shows me short-term extremely bullish. The fact that you pierced the channel, look like you're going to close below, but rallied back up inside the channel, which is showing that this is doing its job as support. Considering we picked it up at 26.28, we're below the channel, is just an awesome entry. The secondary reason as to why we picked this up, there's always multiple factors, but not only have you had an oversold condition at support, you also have a massive technical gap fill area, which was filled today. So that is really awesome price action. I'm very happy with our entry. You can see that on the intraday chart from our entry at the lows here. Look at this surge in volume. Look at this bullish price action forming. So that is extremely healthy, considering that this is when you had the dollar rallying, the sell-off, and then the late day the dollar could not confirm that breakout. Markets caught a little bit of a buy program and bid, most likely the algorithms recognizing that late day failed breakout. So Li Auto's another one, NIO's another one, but overall, and then we also did add to our CIX short. So I do think this will see some downside as well. We're slightly out of the money on this trade, but again, I'm starting to see some distribution patterns with the volume picking up to the downside. You are in a completely extended state. If we simply click on the weekly chart, you can see that you still had 1, 2, 3, 4, 5 weeks of upside with little 1 week pause over here. But nonetheless, I do think that we start to see some downside in the stock. Not saying that CIX can't go higher, but I do think as natural gas markets and energy see that final leg down, the energy stocks will be tremendously hit. And if we simply look at the XLE is starting to see some distribution as well. You could be forming, it's a little premature, but you could be forming a little bit of a bear flag here. You can see you hit support, you've bounced off of it, but it's not really that convincing. Volume is picking up, which is kind of concerning considering the short-term trend is to the downside over here. Every time volume picks up in the short-term trend, it usually means the intermediate trend could be on the verge of changing. So again, as oil's collapsing, as natural gas is potentially rolling over, you could see the energy sector under an immense amount of pressure, considering you've had an impeccable rally from this low over here all the way to the high over here. You know, the energy traders have to be pretty happy with that. But again, I do think energy is going to see some more downside in the short term. But overall, a couple of our other positions, you know, we did cover half our ITB position here. I do think as rates pull back, we still see a little bit of upside in the ITB, which is why we covered it yesterday down here, reduced half of our exposure. And I am prepared to add more if we float a little bit higher to therefore raise our average and have a better short entry. Let's take a look at Apple's price action. Apple's price action was interesting as well today, considering you had this reversal signal here. Price action almost took out that low, but again, you still were holding that major reversal low yesterday. And if we look at the intraday action, a little bit of a daily bottom or an intraday bottoming tail here. The lowest point on the intraday basis came in on volume, followed up by a secondary massive volume buy. So obviously if Apple leads this, if Apple starts to rally, this market most likely will follow Apple's lead to higher. Where I think Apple could potentially go is to this gap fill over here. I think we have a decent shot of Apple rallying all the way up to the 160 level before it starts to roll over again. And this may coincide with Apple rallying to this gap fill here around September 12th, 13th, where it could coincide with this downsloping trend line before taking markets down to its lower level. But the fact that you have this massive gap here, I do think Apple will most likely tease investors by recapturing the 200-day moving average, making a lot of institutions bullish again before reversing. And that's the importance of waiting for confirmation above key technical areas, where we most likely will see a one-day surge above that 200-day moving average before seeing a reversal back down. So that's kind of my insights for today. I'm going to be analyzing all the charts on a weekly basis as we have a new weekly candle formed. But nonetheless, I do think equities and the stocks that we are in can catch a potential bid. Let's just take a look at FCX, Freeport-McMoRan. So we do have a small position started to accumulate in that. I do think if the dollar pulls back, FCX along with copper will likely catch a big time bid. If FCX comes down, I will likely add at this gap fill around the 25.86. There is a shot that it could come down and hit this gap fill, which will also be this downsloping trend line. As long as we hold this trend line, I'm still super bullish. If we start attacking these lower ranges and close below these trend lines, then my bearish side might kick in and we may have to cut it for a loss. But at that point in time, we're not even at that point in time. We still have so much maneuverability to dollar cost average and put ourselves in a position for a technical bounce trade as copper and equities get a bounce, which should correlate with the dollar falling. So again, please give this video a big like down below, and we'll continue to try putting out as much material as possible to give you additional insights and kind of an edge against the markets. I know all of us retail traders certainly need as much help as we can get. I try to consume and analyze as much valuable and important information as possible and try to communicate it effectively by reading the charts and giving you my kind of forecasts and trends. But I think we're well positioned. Many of the trades that we have on the table are actually in the money, so we are well positioned moving into next week to continue to print and bank profits. So I'm very, very satisfied with where we are at this point in time in our accounts, how much cash we have on the sidelines, considering we closed a whole bunch of our short trades, 6 of them at the beginning of the month. I'm not really that concerned with being too short the market, but there was a point there where I was extremely short that every little bounce in the market was sending our portfolio pretty crazy. Definitely a lot of volatility, but considering that the charts were telling us to be extremely net short, that's what happened. That's what we did. We capitalized on 6 winning swing short trades, and it basically propelled our accounts, our swing trading accounts, to new highs. So kind of my whole emotion is I try to check my emotions and listen to the charts even when my rational brain is kind of screaming. I even had members and other mentors message me saying, slamming me with all of these short articles, institutions that are always net short, never profit, never do this. So that was kind of the sentiment indicator that I knew we were close to a top, because some members and mentors were saying, you're crazy for going this short. There's way too much on the line. The markets could bounce on you. They absolutely could, but when the charts are screaming go short, you have to listen to them, because more times than not they are right. So I'm glad I did listen to them, but it's just very funny how sentiment usually aligns up with tops and bottoms. So overall, amazing price action. I'm super excited for next week, considering we closed at a new high in our accounts this week. And just give yourself a round of applause, a pat on your back. Learning and earning at the same time is the name of the game. Let's just stay humble. I'm shooting for 50% gains, at least ROI of 50% this year. We're at about 42%, maybe a little bit higher. So I'm close to that, achieving that target of 50%, which would just be extraordinary given these circumstances. So wonderful job trading this week, and I'm excited for what next week has in store, but we'll see you on the charts next week. Everybody enjoy your weekend. Take care, kick back, relax, and we'll see you on the